So where do you guys see this going, I guess, in the near term then? If, assuming that this works for Trump, he's able to lower interest rates, he's able to force the Fed to print more money. Looking a couple months out here, what's your guys' timeline on this for when this really starts impacting our favorite coin?
I think it's already doing it. I mean, I think Bitcoin, it figures these things out in advance, right? It knows where things are going. People, they leverage into Bitcoin, so they leverage out, and Bitcoin just drops big, right? And it's happening consistently. It's always going to keep happening because over time, people are going to figure out what Bitcoin is. People are going to see where it's going. They're going to see the potential, and they're going to see that they don't want to play these games. It's already happening. I think people who wanted Bitcoin, who already knew these things were going to happen, they've been talking about it for years. And eventually, maybe the price hasn't caught up yet. Maybe the price should be at millions of dollars. Maybe it should be at tens of millions of dollars. But maybe the price hasn't caught up. Maybe the price just hasn't caught up yet. But eventually it will. Eventually we see those massive prices. Like you'll be able to get 10 sats for $1 at some point. But it's because these games are being played and everybody's just messing around with the dollar. The US knows that it can mess around with the global economy by making one announcement, right? It's going to affect Bitcoin's price over the long term. Maybe in the short term, it's dropping. A lot of people are panicking because it's fallen temporarily, but eventually it'll come back up. And like I say all the time, 109K is going to be a rounding error soon enough.
Yeah. I mean, there's so many tailwinds for Bitcoin, and I think what we're seeing here is an example of people recognizing the actual worth and the utility and the use case of Bitcoin. And there's this tweet here by Dylan LeClaire that he posted just not too long ago, an hour ago. He said, no supply chain risk, no jurisdictional risk, no earning risk, no debasement risk, no credit risk. This is what you need when you're looking for a safe haven asset. So I think that people are recognizing this. I think more and more people will recognize that. And Bitcoin's going much, much higher. And the Fed has to lower rates. I think they probably should have last time. I think they're going to be behind the curve, but they're going to lower rates. And what happens with that is credit becomes easier. There's going to be a lot more liquidity, and that will all flow into Bitcoin because it is the best asset in the world. It is the soundest money in the world, and it's a black hole for capital.
Yeah, that's a great point, Forrest. And I kind of was going to allude to what's something that Rajat said on one of our shows recently. He said that all other assets other than Bitcoin have more risk involved and less reward.
Yeah.
And when you think about it that way, like you just kind of pointed out the areas there, the jurisdictional. Can you repeat those again, just for everybody to hear again? Because I think it's important.
Sure. Yes, I can actually throw it up on the screen too if you want.
Sure.
You want that?
Yep.
Okay.
But that was the quote. It was anything other than Bitcoin has more risk and less reward to it.
Yeah, no supply chain risk, no jurisdictional risk, no earning risk, no debasement risk, and no credit risk.
So maybe let's just stop there for a second, just kind of break this down one at a time. So no supply chain risk. That means that with the tariffs and stuff, that's obviously going to have a big impact on the supply chain in terms of products coming from other countries into the US. So that's a risk that we're seeing. Probably the biggest impact on this drop right now is the supply chain risk, because those goods are going to be more expensive. Consumers are less likely to buy them when they cost more. And so that's a supply chain risk. Jurisdictional risk. What do you guys think about? Oh, sorry, Rajat.
Oh, no problem. Bitcoin doesn't have a product, so there is no supply chain.
Yeah. I mean, there's an argument with like Bitcoin proxies of miners of like, if the miners need to upgrade, they're going to be importing these ASICs from China. Again, that's why I looked at Mara, is they're not upgrading their fleet. But anyway, that's besides the point. With jurisdictional risk, it means that Bitcoin isn't located in one country. It's not coming, like supply chain is part of this maybe, but it's not like all Bitcoin is in China. And if you're in the States, you're buying it from China. It's global. It has no jurisdiction. It has no location. It is digital.
And I think a big one that pops out for me was when China actually put a ban on Bitcoin mining. So that would be a jurisdictional deciding that they don't want any sort of Bitcoin activity within their country. But what happened after that? All that mining left China. There was a big drop in the hash rate of Bitcoin. And then a couple months later, those miners just moved somewhere else on Earth. And the mining picked up again, and it's skyrocketed ever since then.
Mm-hmm. Yeah. And no earnings risk. I mean, it's not a company, and these companies are affected. Again, I mean, tariffs is the big one here. Tariffs is underlying a lot of this. So if tariffs are going to affect the bottom line and the earning potential of a company, that company isn't as profitable and therefore should go down in value, its share price and market cap. But Bitcoin is not a company. It has no earnings. It is just money.
And then there's no debasement risk. Nobody can create more. Nobody can print more and just throw it into the market. Impossible. You can do that with everything else. You can do that with dollars. You do that with real estate. A lot of people don't think you can do that with real estate, but you can debase other people's real estate by creating more and adding it to the economy. If somebody, let's say, for example, you own a house in a really great area and some massive corporation buys the land next to you and they build a condo, your land has been debased.
Yeah.
Your Go ahead.
It can happen even quicker than that. It doesn't even, because it takes time to build something. But
Yeah.
if a regulation changes, a local regulation of development of, okay, now we can subdivide these properties.
Yeah.
Boom, that just happens overnight. That's like really basic. It can happen with real estate.
Yeah.
I think the other one too there would be gold. A good example of that is gold. Debasing, they just find more. As technology improves, if the price went up, they would just go and find more gold. That's what's going to happen. And that's what made me think of the earnings risk as well, is that we're moving into a very high-tech world now where the prices of everything are going to fall in real terms, in Bitcoin terms, maybe not in fiat terms, but they're going to fall. And that's going to have a big impact on some of these earnings and just the overall global competition that Bitcoin creates, where somebody in their basement can now create products and sell them to anyone on the earth because they don't need a bank account anymore. Somebody can just send them Bitcoin.
Yeah. That changes everything. That changes the entire economy. Like if you think about it, you can produce anything anywhere in the world and you can sell it if you have the raw materials. So instead of having to import all those raw materials from, let's say all these countries in Africa, they have these precious metals and they import them or they export them into the US. Maybe they'll be able to produce their own companies because now they can accept Bitcoin and they can start shipping those products into the other country. They can start shipping end user goods, like finished goods, to the product to their customers, rather than having to ship the raw materials and making a much smaller profit. Basically, what they're doing right now is they're sending, let's say, lithium or whatever the precious metals are, whatever the chemicals are that the U.S. needs to, let's say, build Teslas. They're having to take those raw materials into the U.S. and they're not able to take advantage of the skills that are required to make the end product. So that's where most of the profit is made.
Yeah. You know what's crazy is, like, with globalization, it's like, how is the US supposed to compete against nations that basically have slave labor or next to slave labor, subsistence wages? Like, we shouldn't have to try to compete with that. Like that's not fair. Like, and it's not fair to those people. It's not fair to anybody involved. And they do that with debasing their currency. And the only way, like, tariffs kind of make sense with that, because it's like, this shouldn't be that cheap. It shouldn't make sense to ship a raw material. We do this in Canada. We're a resource rich extraction economy in a lot of ways. We ship raw logs, bitumen. We don't even refine our own oil. We ship our oil to the US, they refine it, they send that oil back to us. If there's tariffs on that, that's going to get hit like what, twice or something with these tariffs. Like, we shouldn't do that. We should be refining our own oil. We should be milling our own lumber and refining everything here. Like, it's crazy that it makes sense to ship things around the world for cheap, to get access to cheap labor that is artificially kept cheap because of laws and of those nations.
100%.
The last thing I would add to that is that when you think about it like that, because there's slave labor essentially available in these other countries, that's basically how they've managed to keep prices down for this long. Right. And I think that that's a secret that not a whole lot of people talk about, is that yes, inflation's been going up 10, 12, 15%. But imagine if that labor was actually paid its true value instead of, because when you get a shirt from overseas, from Thailand, let's say, the cost of that input is very, very extremely low, laughable. And that's how they're able to keep the prices down, because they basically export their inflation by bringing in this very cheap labor, and that's what kind of keeps the cost of these items down, is by exploiting that slave and cheap labor in other countries. So not only is it good for America in terms of making more in the US, but just imagine in the future how much these countries are going to change in the future when these people can actually get paid what they deserve to be paid, and they can get paid in a currency like Bitcoin now. It's a pretty big deal.
It's a huge deal. Yeah. What do you guys think about this last point? No credit risk. So that's like, I'm assuming to do with, if you hold bonds, you have credit risk
or real estate.
I would assume it's like counterparty risk.
Yeah.
Right. So you don't rely on somebody else to finish that transaction for you. So you can just hold on to it yourself. Like, let's say you have the US dollar. The US dollar it's pieces of paper. You're relying on somebody else to assign value to that US dollar in order to give you things that you can buy with those US dollars. So let's say you go to a grocery store. If the grocery store doesn't accept US dollars, then there's counterparty risk there. There's credit risk. Essentially, the money that you have is worthless. And now you have to find ways to pay them with something else. So the credit risk with the US dollar is, of course, the trust in the US government, the trust in the Federal Reserve. If the US government starts borrowing tons of money, if the Federal Reserve starts printing tons of money, then fewer and fewer people are going to be willing to accept US dollars. And that's where your counterparty risk comes in.
Yeah. Yeah. Good point.
A couple things, actually. Bitcoin doesn't have a tariff. That's kind of how this conversation began, from Michael Saylor. But we got to give a big shout out here to Jerry Loves Freedom with a fat super chat for the channel here. I think our channel is officially monetized now, so this might actually be for our first ever super chat for the channel. So thank you, Jerry. Very much appreciated. He said, the Canadian Bitcoin Dream Team. Great work, guys.
I think that actually was on my channel on my restream.
Oh, nice.
Yeah, but thanks very much, Jerry. That's incredible. $30. Wow.
Yeah, thank you, Jerry. And also we got